Ladies and gentlemen, here in this video, we will be going over my estimates for Tesla's Q4 earnings. Not just the numbers themselves, but how I expect the earnings call to transpire and what kind of effect this will have on Tesla stock. I think the bulls and the bears will like this open, honest perspective on Tesla's upcoming earnings. Keep in mind, I am a Tesla bull probably forever, unless something were to dramatically change with the company, but I am not afraid to acknowledge when things do not look great, and so far 2024 has not been that great. Consider sharing this video with a buddy, a friend, a pal, a family member, or someone else that you think needs to hear this. First up, I actually want to start with something that is totally unrelated to Tesla earnings. Vanguard just bought more Tesla shares, and Vanguard continues to buy more Tesla shares. They now own 225 million shares. They previously owned about 222 million shares, so they have added about 3 million shares over the past quarter. This actually follows a noticeable trend of many large hedge funds, institutions, and money managers buying more Tesla stock, even though the stock has done a whole lot of nothing over the past 2 years. At the very least, it looks like Vanguard and some of these firms acknowledge some of the upside that we could see for Tesla stock in 2024. Now, it's not going to be up in a straight line. It's going to be bumpy. It's going to be rocky. And 2024 is going to be the most volatile year that you have likely ever seen in your investment lifetime. Down to the geopolitical tensions, down to the election that's definitely going to be heated. We really don't know how the economy is going to be. We don't know what Fed policy is going to look like. This is really somewhat unprecedented. So it is hard to have all of the answers, but I think we have some somewhat definitive answers for you in this video. So Tesla's numbers that we are going to get for Q4, that's one thing. The most important part of Tesla's earnings on January 24th is going to be the earnings call and the commentary and the forward-looking guidance. But let's start with the numbers themselves. Tesla had deliveries of 484,507 for Q4. What's notable here is subject to operating lease accounting is way down. You're only at 2% of the total. So that should bring in more top-line revenue this time around and hopefully a higher margin. What's also notable here is your other models. This is S, X, and Cybertruck deliveries were about 5,000 higher than production. So that should be really good for margins as well. Essentially, Tesla ran down their inventory of X, S, and Cybertruck by about 5,000. So that inventory was already registered as on other earnings calls, right? So that's additional revenue that Tesla will bring in, whereas the cost of producing those vehicles has already been felt. So that should also help to boost the numbers at least a little bit. So first up, we have to do a little bit of math, and I'm going to keep this as simple as possible because typically being simple is usually the better way to go about things. I have a very precise calculation for what I expect, and I will share that at the end of this video, but this is roughly what we're looking at for Tesla's upcoming earnings numbers. The average selling price for Model 3 and Model Y is about $46,000. We could times this comfortably by 161,538, and you could be looking at about 21.23 billion of top line revenue for the Model 3 and the Model Y alone. Now for other models, this includes Model X, Model S, and probably around 200 Cybertruck or so deliveries. So we're gonna have to just be a little simple here, take off 200 from this number, looking at 22,769 deliveries with an average selling price of about $72,000. So we'll times that by 72,000. And then you're looking at about 1.63 billion from Model S and Model X deliveries. Now, if we go ahead and do on a different calculator here, just to be a little bit more precise, 200 times 120,000 for the foundation series that are being delivered, that's 24 million. So if we go ahead and add these numbers together, so based on automotive revenues. For the top line, you could come in around $22.89 billion. Now, these numbers might fluctuate a little bit, but that's roughly what we're looking at, just under 23 billion. And obviously, these numbers could fluctuate a little bit more because we don't have an actual breakdown of how many S's were delivered, how many Cybertrucks, how many Model X's. So we're really speculating on the average selling price on other models. You also could have seen more or less vehicles get purchased with FSD, and that would also make quite an impact as well. Now, Tesla on their last earnings under services and other had revenue of about 2.16 billion, and for energy generation and storage, you had revenue of about 1.5 billion. Now, personally, tracking Tesla every single day, it seems like we had a lot more energy storage revenue potentially than that. You're probably going to hit about $2 billion for energy and storage. So that brings us to just shy of about $25 billion. And then just assuming services are around $2 billion, they're probably going to be higher than that. Q2 2023 was about 2.15 billion. Q3 was 2.16 billion. I think I'm being very conservative, going with just a flat 2 billion here. That brings your number to about 26.89 billion for top line revenue. So there's two other numbers that are important. As Gary Black says here, Wall Street's Q4 auto gross margin estimate he thinks is high at 17%. He's at about 16% for Q4 auto gross margins and 70 cents of adjusted EPS. Now, how we actually figure out EPS is the net profit margin. So in September of 2023, September 30th, 2023, the net margin was 11.21%. So if we just stick with that, and we'll say top line revenue was $26.89 billion. This number you see here on screen. Let's say nothing changed. Let's say Tesla did not find a way to increase auto gross margins, to increase margins at the energy storage business, which I find highly unlikely. Because after all, what did Tesla say here on their last earnings quarterly update card deck? Well, they said, here, our cost of goods sold per vehicle decreased to $37,500 in Q3, while production costs at our new factories remained higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be a cost leader. So I imagine in all reality, Tesla probably increased their margins. So I think this EPS number you are about to see is very much conservative. So we're going to go ahead and times this by 11.21%. We'll do this by 0.1121. You come out to just a little over $3 billion. Divide this by 3.3 billion shares outstanding, and you come to a number of about 91 cents of EPS for Tesla's Q4 earnings. According to analysts currently with the Wall Street Journal, average analyst consensus for Tesla's EPS is 72 cents. So I'm actually quite a bit higher than that. There's obviously going to be fluctuations here. We also did not account for, again, about 4,700 of your other models that were sold out of inventory and not actually produced in the quarter. So that's going to have another positive impact to Tesla's EPS, which I did not quantify here in this video. But again, remember that because I think it just shows how conservative this actually is. But believe it or not, the numbers themselves, that's going to be great. It's going to be awesome, especially if auto gross margins do improve, but it's not going to be the biggest driver of Tesla stock. The biggest driver of Tesla stock specifically is going to be the forward-looking guidance and commentary. On this front, it's totally unpredictable because on one hand, we don't know what the landscape is going to look like. Elon Musk is going to have a little bit more information, but the last couple of earnings calls, he sounds very doom and gloom. But yet Tesla continues to put up impressive numbers. So that is a bit of a wild card. We also have another potential wild card, which could be the announcement of new products. That is a possibility. We are hearing some rumors that the Roadster could be coming out in the beginning of Q2, which is in the not so distant future. If that were to be the case, then we'd probably hear about that on this upcoming earnings call. The other important factor is Elon's compensation package. We talked about this in the last video, and I highly recommend you guys watch that if you did not. But Elon's essentially working for free right now. He owns a lot of Tesla stock, so if Tesla stock does well, he makes more money, but he has no incentives to grow the company as of right now. Elon could walk away and let someone else come do the job, and that would be that. Elon could focus on something else. He would own his stock. Tesla would probably do well either way, right? Let's be honest, without Elon or with Elon, it's going to do better with Elon for sure. But he could walk away like Bezos or Bill Gates or anyone else that builds a great company and then ends up walking away. So a compensation package, there's going to be milestones, market cap milestones, operating milestones as well. Maybe. We don't know if that would actually be announced on this earnings, but since it is the first official time we're going to hear from Tesla on a corporate setting, on an earnings call in 2024, this would probably be the most ideal time to actually do this. Whether or not those milestones would be $1 trillion, $2 trillion, $5 trillion, $10 trillion, we don't know. That would get, I believe, shareholders pretty excited. Like, hey, what happened with the last two compensation packages? Elon hit all of the milestones. What's going to happen in the next one? Elon's probably going to hit all of the milestones. So those are unquantifiable deviations that we cannot quantify in this video because we just don't know what is going to happen. But I do have an upside bias as far as anything that could be announced. But then again, just like last earnings, the biggest risk is actually Elon on the earnings call saying the same things that he said before. We might enter a recession. Things don't look good with the consumer. And really, one of the problems I had with the last earnings call, I am totally for let us know how you feel. I love the brutal honesty. I really do. But let analysts ask questions. We only had like 3 questions asked on the last earnings call. You should have 15 or 20, right? So a lot of people walked away from Tesla's last earnings call with more questions than answers. And that should never happen, no matter what the landscape looks like in the marketplace, no matter what the numbers look like from the company. So believe it or not, if we just get an orderly earnings call where questions are asked, that could actually be a big positive for Tesla as well. Now, long story short, I am not worried at all about this quarter for Tesla. I'm a little concerned that we might see a disaster of an earnings call again, and that would be negative. Overall, I'm actually very bullish heading into Tesla's earnings. And probably the biggest reason for this, specifically with Tesla stock, is just what's happened to the stock recently. Tesla stock has gotten absolutely obliterated over the past 11 trading days. Tesla stock has been red 10 of them. You've broken under the 50, 100, 200-day moving averages all in the same time. You've broken under the demand zone between 230 and 240. Tesla stock's currently under $220 per share. You're already pricing in some pretty bad things coming with earnings. And I think more so just the commentary on the earnings call. I don't think this recent sell-off has much to do with concerns about the actual numbers themselves. But the two most important things, if you want to boil all of this down, it's the forward-looking guidance on auto gross margins, whether or not margins have bottomed, if we're going to see an improvement there, and full-year deliveries. Now, on the deliveries side, you have the median target around 2.2 million deliveries for full year 2024. That's going to be around 20% growth total, closer to about 22% growth. On the highest estimate, you have about 2.45 million deliveries. That would be roughly about 35 to 36% growth next year. That would be basically in line with what we've seen for 2023 as well. The lowest end estimate is around 1.9 million deliveries. So on the low side, analysts are not expecting much growth. On kind of the mid ground, you're expecting low 20s as far as a percentage growth rate of deliveries in 2024. On the high end, you're around 35 to 36%, which preferably we get a guidance of 2.3 million, maybe higher than that. That would be very good news for Tesla, especially if Tesla forecasts auto gross margins to improve. Now, I'm not going to get that optimistic about both of those things happening just because I think Tesla's a little bit worried about the economy at the same time. At least that's what I've gotten from the last couple earnings calls with Elon. But I'm still more optimistic than not, especially considering the recent sell-off that we have seen. Now, just for a little bit of fun math here, currently, Tesla has an EPS or a PE based on EPS, the past 12 months EPS, of 70 times. Wall Street currently projects 2024 EPS at $5.65 per share. So that means theoretically, if nothing really outperforms expectations, if we come perfectly in line with $5.65 of EPS and we see zero multiple expansion from here, that could put Tesla stock by the end of 2024 around $395.50. And again, just to reiterate my estimate, I'm around $4.50 of EPS for next year, so that's considerably lower, $1.15 of EPS lower than Wall Street's estimate here per Wall Street Journal. But I do think multiples will expand just because I forecast by the end of the year, there's going to be a lot more money coming into stocks. Tesla's probably going to be we're either going to be in a recession at that point or, heading into one or avoiding one completely. The Fed's going to be cutting rates at a huge degree if we do start to slip into a recession as well. So for multiple different reasons, I think the multiple can expand to 100 with $4.50 of EPS. That puts my base case still at $450 per share. This earnings, though, the first earnings of the year really sets you up, though, for the rest of the year. Let's say theoretically Tesla comes out and guides for 1.9 million deliveries. You're going to have to see margins improve a ton, or you are going to have to see a lot of multiple expansion, which multiple expansion would look unlikely at that point if Tesla's growth is stalling that much. So depending on whether Tesla's at, 2.1 million deliveries, that's not terrible. Markets can get along with that. 2 million deliveries is going to be bad news, really bad news. 1.9 million, terrible news. Anything 2.3 or higher, that's going to be exactly where you want to be. But again, if that guidance is weak for the full year, that's going to change what could happen potentially for the entire year for Tesla. Now, my hunch is following Tesla's earnings, you're probably going to get a massive rally. Now, I'm not expecting much of a rally until Tesla's earnings themselves. There's a lot of questions. A lot of people love the narrative of sell first, ask questions later. That's just very popular, especially when it comes to Tesla. Tesla's fallen again, 11 or 10 out of the last 11 trading days. So this would be a little bit different of a story based on, my estimates of a post earnings reaction in Tesla stock if Tesla was at $270, right? Maybe you get a little upside from there, but, at this point, you've fallen so aggressively, you could see quite a rally. But I think Tesla could probably fall even more before heading into earnings. I would target around $200 here in the short term, at least before earnings. That's going to be this week and part of next week. And I think if we get market weakness, Tesla's really going to take it on the chin here. Overall, I still think the first half of the year is going to be a lot worse than the second half of the year. Again, we could make a 2-hour-long video on whether or not we're heading into a recession. I simply look at it like this. It's an election year. It's basically political to go into a recession. Not going to be good. I can't say those kind of words on YouTube because they will, not promote these videos. They will, work against me actively like they do Elon. But if you go into a recession, that's basically the worst thing possible. At the first sign of heading into a recession, you are going to see massive accommodation from the Fed and likely from the government as well. They will do whatever they have to do to avoid a recession, at least avoid a moderate or deep recession. So in the worst case scenario, you get a recession and you get massive stimulus. That's your worst case scenario here. It's not like you get a recession and no stimulus. That's not forecasted at all. If you get the soft landing, that's going to be your best possible outcome. Inflation falls more than expected, and I would expect to see potentially even more multiple expansion than 100 in Tesla, and that could take Tesla to very high prices. And that would mean the Fed could cut rates more times than maybe we're even expecting now. So there's a lot of different variables here. These are my estimates for Tesla's earnings. Obviously could be wrong. Just to recap, a little bit less than 27 billion, in the high 26 billion range is what I'm expecting for top line. I think auto gross margins likely to come in around 16%, maybe 16.5%, 17%. That wouldn't surprise me. I still think the net margins pretty conservative here, just going off of last quarter's at 11.2%. Could it come in higher than that? Of course. That's how I get my 91-cent EPS target. But the main thing is full year guidance on deliveries and margins. What are we expecting there? And then lastly, which I think is very important as well, is Elon's just overall commentary on the economy, on Tesla, and how things are going. So let me know what you think about all of this information down below in the comment section. If you found value out of this video, consider sharing it with a buddy, a friend, a pal, someone that you think needs to hear it. If you guys want to come trade Tesla earnings, come trade all of the earnings that we are going to trade in the trading community this earnings season. Earnings season is my favorite season. That's where you can make some monstrous returns, especially with the strategy that we employ for maximum upside possible with the least amount of risk possible. Well, come join us. I have tutorials how to learn these strategies. You can apply them yourself if you would like. Obviously, I'm not a financial advisor. None of this video is financial advice. If you join that community, you are subject to lose all of your money, especially if you don't know how to manage risk and take risk management into account. So thank you for watching. Enjoy the rest of your day. My name is Michael Tyler, and I will see you in the next one.